Okay, just a moment. Swanika, last class we were doing which one, dear? Till last class what we did? Yes, Swarnika, can you remember, dear, last class till where we did? Am I audible? Yes, Swarnika, Pavitra, am I audible to you?
Yes, ma'am.
Okay, okay. Okay, take page number 11, dear. Open the PDF. Take page number 11, 1 both of you. Swarnika and Pavitra. Today we are going to learn charge against profit versus appropriation out of profit. Extremely important concept. If this concept is clear to you, you can solve any question related to PL appropriation account. Any question, I guarantee. If this concept is clear from your book, whatever book you are following, maybe TS Gerewal or NCRT, you can solve all the questions. That much extremely important this concept is. So I will make you understand. See, our business, it has two type of expenses. Okay, one type of expenses business needs to pay out of the profit. If the business earns profit, then those expenses will be paid off by the business. Other type of expenses are whether the business earns profit or business suffer losses. Business needs to pay those expenses. So what I taught you, the important thing is there are mainly two type of expenses in our business. One type of expense business needs to pay even if the business suffer loss, means business suffer loss or earns profit has nothing to do with those expenses. Other type of expenses are if the business earns profit, then only those expenses will be borne by the business. Otherwise, those expenses will not be borne. Now, the meaning of charge against profit means, as I told you, there are two type of expenses. So, in charge against profit, there are those expenses which business needs to be needs to pay even if the business suffers loss. Okay, those expenses needs to be paid first before calculating profit. We can say in this way also. Before calculation of profit, these expenses needs to be paid. Even if the business suffer loss, then also these expenses has to be borne by the business. Now, what are those expenses? For example, rent of the building. Now, rent of the building means what? Suppose I am a businessman. I have taken a room for rent. I am paying monthly rent to the landlord and I am running my business in that particular room which I have taken for rent. Suppose in a particular month my business is not going well. I am suffering loss. And the landlord at the end of the month, he or she will come and they will ask the rent. I can't say this month I suffered loss, I can't pay you the rent. If I say in that way, what will happen? They will tell us get lost, right? So I can't say that whether I am earning profit or suffering loss is none of their business. They want the rent, that is expense of the business, charge against profit, means whether business earns profit or suffer loss, nothing, these expenses has nothing to do. Expenses needs to be borne by the business in either of the case. So rent needs to be paid by the business to the landlord even if the business suffers losses. Is it clear, Pavitra, Swarnika? Are you
Yes,
understanding?
yes, ma'am.
Yeah. Write it down simultaneously, dear. Don't wait. Just try to understand. Simultaneously open the PDF and write it down. Now, interest on loan. The next example. Suppose I am business. I have taken loan from bank in order to expand my business. Now, suppose in any of the month I am suffering loss and the bank is asking interest because I didn't repaid the loan amount. So, I can't go to the bank and say, I am sorry, I will not pay you the interest because I am suffering loss. No, bank has nothing to do with my business. Once I have taken the loan, I have to pay the interest on loan to the business. Sorry, I'm really sorry, to the bank. So this is also one type of expense, charge against profit. So basically charge against profit are those expenses of the business which needs to be paid even if the business suffers loss. So these expenses has nothing to do with business profit or loss. Whatever business is earning profit or suffering loss, expenses needs to be paid in either of the cases. That is why these are known as charge against profits. Manager's commission. In our business, we are having one manager. He will not listen to you that I am suffering loss and so and so. So whatever work we have given to the manager, if the manager completes the work in time and we have promised, we means whenever I say we means I am talking about business. I am assuming myself as business. So now the manager will ask commission because he completed his work and he is going to get commission for the work he has done. He can't means the business can't say to the manager, I am suffering loss, I will not pay you the commission. No. So what I said, rent of the building, interest on loan, manager's commission, etc. Like these, there are few expenses which needs to be paid by the business even if the business suffers loss. I hope charge against profit is clear to you. Right? Pavitra, Swarnika,
Yes,
clear?
ma'am.
Okay.
Yes, ma'am.
Any doubt you want to ask, Pavitra?
No, ma'am, I understood.
Very good. What about Swarnika, dear?
It's clear.
Okay, dear. Now we will move to next. Now now charge against profit are always debited to PL account. One more very extremely important concept. Now these expenses which the business needs to pay even if it suffers losses are always shown in the PL account. Go back to your class 11th. In class 11th sole proprietorship, you must have learned to prepare trading account, profit and loss account and balance sheet. So I am talking about that profit and loss account. In that, whatever expenses we show in the debit side, since PL account is a nominal account, so the rule of debit and credit says you have to debit all the expenses and losses in the I mean to say we have to show all the expenses and losses on the debit side. We have to show all the income and gain in the credit side of the nominal account. So PL account is a nominal account, and in the debit side of PL account we show these expenses, charge against profit. Charge against profit means those expenses which the business needs to pay even if the business suffers loss. So always rent of the building, interest on loan, manager's commission, all these are shown in the profit and loss account. You should be very clear. Now we are moving to the next concept, appropriation out of profit. Now what is the meaning of this? Appropriation out of profit are always debited to PL appropriation account. Now what is this PL appropriation account? PL appropriation account is always prepared to distribute the profit among the partners. Okay. First, the net profit will be given in your question. No need to prepare PL account because the net profit will be given in your question. From that net profit, whatever the partner needs to be paid by the business will be given, like salary or any commission, interest on capital, All these things will be given in your question, which the partner will get from the business. So this PL appropriation account is always prepared by the business to distribute the profit to the partners. Now, in this, the second type of expenses goes, as I told you, there are two type of expenses. First type we already learned, charge against profit. The second type of expenses are those expenses which the business pays to the partner. What is the condition? If the business earns profit. You have to focus, try to understand, very important concept. What I said, in PL appropriation account, in the debit side, we used to show those expenses which are paid by the business to their partners only if the business earns profit. So appropriation out of profit means only if the business earns profit, these expenses will be paid. Okay, if the business suffers loss, suppose in your question they are saying that net loss, sometime you will find net loss is given. They are asking you to prepare PL appropriation account. And in that type of question, they will ask you to pay salary to partners, interest on capital, commission to partners. Partner, I am talking about partner. So, in that case, business will not pay a single pie to any of the partner because business has suffered loss. And what is the rule for PL appropriation account expenses? Business will pay this salary to partner, commission to partner, interest on capital to partner, any bonus to partner only if the business earns profit. In case of loss, nothing will be paid to the partners. This is the rule which you should keep in your mind. Even if the question says there is a net loss, you have to pay to, suppose there are two partners A and B, pay salary to A, pay bonus to B. No, you can't pay in case of loss because the expenses which business will pay to the partner, I am focusing partner. Employees are different from partners. Employee salary will go in PL account. It is charge against profit because employee will not work free of cost. If you don't pay them salary, they will leave your work, they will search some new job. So paying salary to employees, paying wages to the laborers is compulsory and it comes in PL account, not in PL appropriation account. And partners are owners of the business, so they will get profit only if the business earns profit. Otherwise, if the business suffer loss, owners will bear that loss. They have to bring from their home and distribute among themselves the losses. Are you understanding? Pavitra, Swarnika, concept is becoming clear?
Yes, ma'am.
Okay. Any doubt you want to ask anyone?
No, ma'am.
Okay, fine. So now what we are going to do? So all these points keep in mind. If possible, write it down that in case of loss, no salary, bonus, commission will be paid to the partner. In case of profit only, salary, bonus, commission will be paid to the partner. Write it down clearly as important note. Now, what are the things that the business pays to their partners? Partners are owners of the business. For example, interest on capital. The partner must have invested their capital in the business. Now the business will pay interest on that capital to the partners. Then suppose any partner is getting any salary, bonus, commission, all those things will be paid out of the net profit. From where the business will pay salary, bonus, commission, interest on capital to the partners? Out of the net profit. That is only appropriation out of profit. Reserves, suppose the business wants to create any reserve. Always remember, again you can write it down as important note. Reserves are always created out of profit. Now what is the meaning of this? Suppose there is loss in the business, reserves cannot be created. Reserves are created out of profit. That is the reason always we show if any reserve is created out of the profit in the debit side of PL appropriation account. Reserve we never show on the PL account, because what is the rule? In PL account, those expenses which we show comes which we have to pay even if the business suffer loss. But in PL appropriation, only those expenses comes which we have to pay to the partners only if the business earns profit. So reserves will never come in PL account. It always comes in the PL appropriation account. In case of loss, no reserve will be created. In case of profit, only reserves are created. That is the reason reserves we always show in PL appropriation account in the debit side. And why the business create reserves? Reserves are always created by the business in order to meet any unexpected loss, because business is full of uncertainties. We don't know in future what type of loss business may have to face. So in order to compensate that loss, out of the profit some amount is kept aside, which is known as reserves. Is it clear, Swarnika, Pavitra? Are you understanding, dear?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. Any doubt?
Mm.
Fine. I hope you both of you are writing, right? Write it down everything, dear, simultaneously.
Yes, ma'am.
Okay. Now page number 12. Interest on capital. Now how to calculate this interest on capital? So first we will be reading the question. Try to understand, then we will do the solution. A and B are partners in a firm, sharing profit and losses equally. There are two partners in a business, A and B. And what the question says, both A and B, they are sharing profit or loss equally. Their capitals on 1st April 2015 were rupees 4,80,000 and rupees 5,40,000. One more important point, as important note, you can write it down. Please kindly write it down. It's very, very important. Interest on capital is always calculated on opening balance of capital. So write it down clearly. Always means always. Like 1st April 2015 is the opening balance of the capital given in our question. Sometime you will find when you start solving the question, closing balances are given. How you will identify whether it's a opening or closing balance? Very easy. 1st April, always opening balance. 31st March, always closing balance. End of the year. So by seeing date is very, very important. If you find in some question that closing balance of capital are given, you cannot calculate interest on capital. First, what you have to do? First thing, you have to calculate the opening balance. I will teach you everything. So how to calculate that opening balance of capital? There is a formula. By using that formula, first we will be doing calculating opening balance of capital. After that, we can calculate interest on that. Are you understanding?
Yes, ma'am.
Yeah. In this question, no issue, because already opening balance is given. So 1st April 2015, A is having 4,80,000 capital, B is having 5,40,000. Now on 1st October during the year, because the financial year starts from 1st April 2015 means 31st March 2016 the year will get end. Now in between the year 1st October 2015, they decided, they means both these partners A and B, what they decided? They decided that the total capital of the firm should be rupees 10 lakh. A and B are the two partners. Opening balance is given 4,80,000, 5,40,000. Now during the year, that is on 1st October 2015, A and B, both the partners, they are taking a decision that from 1st October 2015, their capital, total capital of the firm means business, total capital of A and B in the business should be 10 lakh. This is the meaning of this particular line. And now if they are making this decision, then the second decision should come, who should contribute how much. So again they have given contributed equally by both of them. What is the meaning of this line? A has contributed 5 lakh capital into the business when 1st October 2015. In the same way, B has also contributed 5 lakh rupees in the business as their capital. So now total capital of the firm from 1st October 2015 has become 10 lakh rupees. This is the meaning of this line. According to partnership deed, interest on capital is allowed to the partners at the rate of 6% per annum. PA means per annum. Now, there is the partnership deed which is very, very important. If there is no partnership deed among the partner, no interest on capital, no salary, no commission, no bonus will be provided to the partners. Which rule says? Indian Partnership Act 1932 says if there is no partnership deed. Now what is this partnership deed? Written agreement between the partners, how much profit or loss they should get, how much interest on capital they should get, if any partner is getting any salary, how much he will get. All these are in written agreement before starting the business. That is known as partnership deed. In absence of partnership deed, nothing will be given. Profit and losses will be shared equally. No this salary, bonus, commission will be provided to the partners. This is the rule. So now there is partnership deed, so partner will get interest on capital as per the deed. Now what is the deed saying? 6% per annum. So in 1 year, partners will get 6% interest on their capital. You are required to compute interest on capital for the year ending 31st March 2016. Now what the question is asking? Question is asking you to calculate interest on capital up to 31st March 2016, because there is a change in capital from 1st April to 30th September, capital is different. Again from 1st October to 31st March, the capital changes. Now they are asking you to calculate interest on capital. Question is clear? Pavitra, Swarnika, question you are understanding?
Yes, ma'am.
Okay. Kirtika? Sorry, Swarnika. It's clear, dear? Okay. Now, see. First, A is having on 1st April 2015, what is the capital of A? 4,80,000. And what is the capital of B on 1st April 2015? 5,40,000. Now, calculation of interest for A. We will calculate separately for A and B. So, for A, very, very easy. See, you have to just understand from 1st April to 30th September, capital of A was 4,80,000. Why? Because the question says you clearly that from 1st October, A should have 5 lakh capital, B should have 5 lakh capital. Then only total capital of the firm will be 10 lakh. So, first what you will do? From 1st April till 30th September. How many months? April, May, June, July, August, September. Exactly 6 months. Capital was 4,80,000. So for 6 months, first you have to calculate. For 6 months, 6% interest. So 4,80,000 multiplied by 6 by 12 multiplied by 6 by 100. Rate of interest. If you calculate, you will get 14,400. This is only for 6 months. Again, from 1st October to 31st March, again we have to calculate. So, from this 1st October to 31st March. How you will calculate? Now 5 lakh on 5 lakh. But one thing you have to understand, that see how much capital actually A is having. A has invested in business 4,80,000 capital. But from 1st October 2015, A and B have decided to keep their capital 10 lakh rupees. A will contribute 5 lakh, B will contribute 5 lakh. All these are given in our question. But A is having only 4,80,000. How it will become 5 lakh? Very easy. A will bring from his home 20,000 rupees. On 1st October 2015, A is having 4,80,000 capital, but A should have 5 lakh. So he will bring from his home 20,000. He will introduce. He will bring additional capital into the business. Who? A. Then only his capital will become 5 lakh. Till here any doubt? Pavitra, Swarnika, please ask dear. Don't hesitate. Are you understanding?
Yes, ma'am, it is clear.
Okay, what about Swarnika dear? You are not audible to me dear.
Not audible to you.
Yeah dear, now you are audible. It's clear to you, Swarnika?
Yes.
Okay. So now we are going to calculate 5 lakh multiplied by 6 by 100. That is the rate of interest, multiplied by 6 by 12. How? Only for 6 months. Very easy again. From 1st October to 31st March. Just calculate the months. Keep in your finger. October, November, December, January, February, March. You will have 6 months. So 6 months again interest on capital will be calculated for 5 lakh, because 5 lakh capital remains in the business for another 6 months. So 15,000. Now if I tell you what is the total interest on capital of A, very easy. For the first 6 months 14,400 rupees. For the second, like another 6 months, 15,000. So total A's interest on capital is how much? 29,400. How we got? Why the interest on capital are different for first 6 months and another 6 months? Because amount of capital invested in business differs. For the first 6 months, the capital is 4,80,000. For the another 6 months, the capital is 5 lakh. That is the reason the interest on capital is different for the first 6 months and another 6 months. I hope A's interest on capital is clear to both of you. Yes?
Yes, ma'am.
Okay, dear. Pavitra, you don't have anything to ask, dear. Are you understanding my way of teaching?
Yes, ma'am, I'm understanding.
Okay, fine. Now we are going to calculate the next. Next means again they are asking to calculate for B. So interest on capital for B. First, from 1st April to 30th September, how much capital was invested by B in the business? 5,40,000. Everything given in our question. So interest on capital for B. You have to do the calculations. It's your like now itself you can do it. So 5,40,000 multiplied by rate of interest 6% for 6 months. Because again from 1st October to 31st March capital will change for B. That is the reason for first 6 months. You can do the calculation now itself dear in your notebook. So just calculate whatever is coming, write it down. Then again for the other 6 months, that is from 1st October to 31st March, other 6 months. Capital invested by B in the business is 5 lakh. Everything given in our question only. Just we have to understand it, what the question says. Then we have to do accordingly. So now 5 lakh multiplied by 6% multiplied by 6 by 12. Then just calculate how much it is coming. Then just add together for the first 6 months, then other 6 months. Then total interest on capital for B you will get. You have to solve it. Okay, after the class, after every class, Pavitra, if you are joining in my tuition, after every class you have to send me the class notes, whatever you are writing. Okay, Pavitra?
Okay, ma'am.
Yeah, fine dear. So I hope you don't have any doubt in the first question. Shall we move to second question or having any doubt? Anyone? Swarnika, Pavitra, having any doubt to be asked, dear? First question.
No, ma'am.
Oh,
No, ma'am.
okay, dear. And Pavitra, which book you are following, dear? Like in your school, T.S. Gerewal or NCRT?
We actually take the help of D.K. Goel.
Okay, that's also very good book. So you are having D.K. Goyal at your home?
Yes, ma'am.
Okay. So have you practiced all the questions from this first chapter, because in your school admission is going on, right? Admission. So this
Yes,
chapter
ma'am.
you have finished. You did all the sums.
Yes, ma'am.
Already you finished all the sums.
Yes.
Okay. Fine, fine. So now we are moving to the next question. A and B are partners in a firm. Their capital accounts showed the balance on April 1st, 2019. Again, here also no issue, because April 1st, 2019 opening balance of capital is given. How much? Rupees 4 lakh. As 4 lakh and rupees 3 lakh respectively. So, opening balance for A is 4 lakh, opening balance of B, that is 1st April 2019, 3 lakh respectively. B withdrew rupees 15,000 from his capital on March 1st, 2020. Like in first question, there was introduction of additional capital. Yes, the partners, they introduced additional capital. Like A introduced 20,000. If you see the first question, A was having 4,80,000 and they decided to have 5 lakh. So A introduced 20,000 into the business. But if you see B, he already had 5,40,000. I am talking about 1st October 2015, and they decided to have their capital 5 lakh. B should also have 5 lakh. Then that 40,000 he subtracted from his capital. He took home. He withdraws the capital from the business and took the capital to his home. Here what is happening? Here also withdrawal of capital is taking place. B withdraws rupees 15,000 from his capital. The date is very important, on March 1st, 2020. Now, interest is allowed at the rate of 6% per annum. Rate of interest is given. How much? 6% on the capitals. Compute interest on capital for the year ending March 31st, 2020. Now they are asking us to calculate interest on capital for the year ending 31st March 2020. Okay, we will do. Now, interest on capital for A. First we will be calculating interest on capital for A, then for B separately we will be doing. Now see, this is the working notes. This line is a working note. So 1st April 2019, actually I forgot one thing to be given in your question, that is the 1st August. Okay, 1st August the capital changes for A. Okay, so A is introducing 50,000 more. So you can add in the question, 1st August A is introducing 50,000 as additional capital. Okay, just add in your question. It is missing in the question. Are you understanding, dear? Swarnika, Pavitra, are you understanding?
Yes, ma'am.
Yeah.
Yes, ma'am.
Yeah. So just add in your question that on 1st August, A has introduced 50,000 additional capital into the business. Just add this line. Rest of the question is correct. So now, on 1st August, A's capital is changing. So before 1st August, that is from 1st April to April, May, June, July, 4 months, the capital remains how much? 4 lakh. So 4 lakh multiplied by rate of interest given in our question 6%, multiplied by 4 by 12. When you solve, you will get 8,000. This 8,000 interest on capital is for 4 months. Now what about the next? The next means, like in 1 year, total how many months? 12. and out of 12, 4 months the capital is 4 lakh and he is introducing 50,000 from 1st August. So A's capital from 1st August till 31st March is 4 lakh 50,000 for 8 months. The capital changes. So August, September, October, November, December, January, February, March. For the next 8 months, the capital of A is 4 lakh 50,000. Again, calculate separately for the 8 months. 4 lakh 50,000 multiplied by rate of interest 6% multiplied by months 8 by 12. If you do, you will get 18,000 interest on capital for 8 months. 8,000 for 4 months. Just add both these together. So total interest on capital for A is rupees 26,000. Any doubt in this? So far any doubt you people are having? Yes, Swarnika, Pavitra? Okay. Are you writing, dear, simultaneously doing the sum?
Yes, ma'am.
Fine. Now we are moving to B. Now we have to calculate interest on capital for B. So again you have to see on 1st April 2019 what was the capital of B. It is given in our question 3 lakh. But you have to see the changes. Whenever you are calculating interest on capital, now you have to see the dates. It's very important. Before in the question they will say on a particular date the capital is withdrawn. On a particular date additional capital is introduced. So you should be very alert and focus on the dates while calculating interest on capital. If you see this question, what B is doing? First, his capital is 3 lakh rupees for the first 4 months. Because again if you see 1st August, what is happening? B is also introducing 40,000. Okay. What is happening on 1st August? Again B is introducing additional capital. How much? 40,000 he is introducing on 1st August. So again for 4 months you have to calculate B's capital interest. First 3 lakh rupees multiplied by rate of interest 6% multiplied by 4 months. It comes to 6,000. Then the question says on 1st August B introduces 40,000. If it is missing in the question, kindly write it down, dear. If this line is missing, that 40,000 is introduced by B into the business on 1st August. If it is missing, please write it down. So now what is happening? But again there is a twist. What is that twist? B, he is withdrawing 15,000 capital from the business on 1st March. That's why I said date is very, very important. So this 3,40,000 from 1st August will be till February. Again there is a change on 1st March. Na? So August, September, October, November, December, January, February. Exactly 7 months this capital is in the business. Capital of B 3,40,000. He will get interest for 7 months on 3,40,000 because again 1st March capital is changing. So 3,40,000 multiplied by rate of interest 6%, that is per annum. 6% is per annum multiplied by 7 by 12. You will get 11,900 for 7 months on this capital. Now if you see the question, they are saying 15,000 B is withdrawing when? 1st March. So on 1st March what was his capital? He was having 3,40,000 as his capital, right? Then he is withdrawing 15,000. If you subtract 3,40,000 minus 15,000, the capital comes to how much? Now the capital comes to 3,25,000. So for 1 month again you have to calculate separately. 3,25,000 for 1 month, that is 1st March, multiplied by rate of interest 6% multiplied by 1 by 12 equals to, if you solve this, you will get 1625. Then total interest on capital for B, easily you can just add everything like 6,000 plus 11,900 plus 1625. It comes to 19,525. This is the total interest on capital for B. Business needs to pay this. For A, how much business will pay interest on capital to A? Rupees 26,000. Any doubt till here? Anyone? Pavitra, Swarnika? Oh,
No, ma'am.
okay, fine. Now we are moving to extremely important topic, calculation of opening capital. As I said, sometime you will find that in your question closing capital is given. Again, the date is very important. Students do this mistake. They are in a hurry to do the sum. They don't read the question properly. They don't read the dates and all. By seeing that capital amount, they will start doing. If you don't see the date, suppose the date is given 31st March 2015 or whatever, if you don't read it and if you calculate interest on that, entire question will go wrong. That is why I am telling, always don't be hurry. Read the question, try to understand it, then start solving it, because these mistakes are done by students. That's why I'm telling you, so that you don't do the same mistake. Always read, whenever they are asking to calculate interest on capital, first read the date, whether it's opening capital or closing. If it's opening, no problem, you can just start doing it. But if the date is like 31st March, you have to use this formula in order to calculate opening capital, then only you can calculate interest on capital. Now, as I already told you to write the note, interest on capital is always allowed on opening capitals. Calculation of opening capital. Now, what is the formula in order to calculate the opening capital? If closing is given in your question, how to arrive at opening? There is a formula. So, write it down. Each and everything kindly write it down. Opening capital equals to closing capital plus drawings if given in your question. Suppose no drawings are given, you can write 0. No need to worry, drawing is not given in question, what to do? If it is given, write it down. If not given, you can just put in place of drawing 0 while solving the question. Minus additional capital minus profit. And suppose losses are given in your question, they are asking you to calculate interest on capital and they have given you closing capital. Now you are going to use this formula to calculate opening capital. Suppose instead of profit, losses are given, just you have to add. These are the things that you should know. Suppose profit is given in your question, just subtract it. In place of profit, if losses are given in your question, you have to just plus it. You have to add it. Okay, is it clear? Pavitra, Swarnika, clear?
Yes, ma'am.
Okay. Now, so closing capital equals to opening capital plus additional capital plus profit. You can write slash minus loss, whatever you can write it down, minus drawings equals to closing capital. This is the, I told you for opening capital, this formula is for opening and we want closing, means you have to do everything the reverse way you will be doing. Now, calculation of salary. Again, very important point. When they will ask you to prepare this PL appropriation account, now what will happen? They may give you monthly salary, yearly salary, half yearly salary, quarterly salary, per annum, like this. Again, reading question is extremely important. Sometime what happens, they will give salary per annum. If you do PA, they will say, if you are in hurry, you don't read the question properly, what you will do? You will think, suppose the question says 12,000 per annum. If you don't read that per annum word, in accounts these type of silly mistakes only happens. You will just multiply by 12, question will go wrong. That's why I am again and again I am telling you, read the question properly. There will be twist in each and every question in accounts. There will be some twist. So, suppose the salary is given per month. Suppose 1,000 per month, you have to multiply by 12, everyone knows. Suppose quarterly, salary is given per quarter, then you have to multiply by 4, because in 1 year, 12 months, after 3 months, 1 quarter comes. So in 1 year 4 quarter will come. Any doubt in this quarter, how the quarter, why we are multiplying by 4? Swarnika, Pavitra, are you understanding dear why we are multiplying by 4?
Yes, ma'am, it's clear.
Yeah. Swarnika, clear dear?
Yes, sir.
Yeah. Now suppose per half year is given in our question. Then what you will do? You have to multiply by 2. Why you are multiplying by 2? Half year means 6 months salary is given. Half year means what? 6 months. So in 1 year there are 12 months. So you have to multiply by 2. Suppose per annum is given annual salary, or they can say per annum. Both means the same. Yearly salary is given. No need to do any multiplication by any number of months. Simply you can take that. It everything depends on question. Now you can take page number 16, 16 you can take. Reserves. All these are the small concept which if you learn, you will not do any mistake while doing PL appropriation account. When we will be solving the PL appropriation questions, you won't face any difficulties because these are the things which will come there. Now reserves. See, reserves are calculated in two ways. Again, it depends on question. Sometime the question will tell 10% create reserve out of net profit. In this way, you will get the question. Now you have to understand what is the meaning of net profit. Already given in question. Net profit is already given in our question. Maybe 10,000, 12,000, 1 lakh, 2 lakh, 3 lakh, whatever amount. Net profit you will definitely have in your question. If the question says to create reserve 10%, 12%, whatever out of net profit, very simple. Whatever given the net profit, you can just calculate and you can write on the debit side of PL appropriation account to reserves. Very simple. Sometime what happens? The question says some 5%, 10% calculate reserve out of divisible profit. Again, both are not same. Net profit and divisible profit are entirely different. Net profit means already given in question. That net profit we write in the credit side of PL appropriation account by PL account, net profit whatever given. Divisible profit means out of the net profit, the expenses like salary, bonus, commission, interest on capital, whatever given in partnership deed, business will pay those expenses first out of the net profit. After making payment, if any reserve is like not reserve, after making payment, whatever profit is left out with the business, that is divisible profit. Okay. Now that profit we have to distribute among the partners in the agreed ratio in partnership deed. Now they are asking you to create divisible reserve out of divisible profit means that divisible profit first you will calculate in rough. Whatever, suppose the divisible profit comes 1000, 2000. On that 5% or 10%, whatever the question says, you will calculate. Then again you have to write in the debit side of PL appropriation account to reserve whatever you calculated. Then that reserve amount also you will subtract from the profit, net profit. Then whatever is left, that you have to distribute among the partners in the given ratio. Are you understanding how to calculate these reserves? Pavitra,
Yes,
Swarnika?
ma'am.
No doubt so far. Any doubt?
No, ma'am.
Okay, fine. Yes, Varnika, it is clear, dear.
Yes, ma'am, it's clear.
Okay. Now page number 17 you can write. Page number 17 you can take. Create reserve at the rate of 10% of divisible profit. Suppose the question, this is just an example, this is not the question, this is a small topic which will be covered in PL appropriation account, but the concept should be clear. Suppose we are preparing PL appropriation account and in your question they are saying create reserve at the rate of 10% of divisible profit. Suppose already this PL net profit will be given in your question. Suppose it's 1 lakh. For example, you can write by PL account 1 lakh. In the credit side we have to write. In the debit side, suppose IOC means interest on capital. This is just an example. Suppose to interest on capital, question tells you to give 10,000 after calculating. So we are paying 10,000 to our partners out of this 1 lakh profit. Then salary 20,000. All these are given in our question. For example, after that, so salary and interest on capital given in question, we have calculated, we paid to our partners out of this 1 lakh. About the reserve, what the question says? Question is telling to create reserve 10% out of divisible profit. Now you have to calculate in rough the divisible profit. So how you will calculate? 1 lakh minus 30,000. Divisible profit is how much? 70,000. Out of that they are asking you to create 10% reserve. So 70,000 divisible profit multiplied by 10%. 7,000 reserve. Again you have to come back to your PL appropriation account. You have to write to reserve this 7,000. Then whatever profit is left, that is 1 lakh minus how much? 37,000 you have to subtract. Then 63,000 comes. Suppose there are two partners A and B, ratio is equal, distribute equally or at the agreed ratio. Understood how to do this reserves, how to create this reserves out of the divisible profit? Is it clear? Yeah.
Yes, ma'am.
Okay, dear. Interest on drawings we will be doing on next class. It's a vast topic, okay? It will take time. So, or we can do one question. It's okay. We will be doing one question. See, now interest on drawing. You can take page number 18, 1-8. Till here, both of you have written everything or want some time to write, dear Pavitra and Swarnika?
I am written, ma'am.
Okay, fine. Swarnika, wrote, dear?
Yes, sir.
Okay, fine. So you can take page number 18, 1-8. Interest on drawings. So again, there are two methods to calculate interest on drawing. Again, it depends on question. Which method we have to apply again depends on question. We will be learning how to do. When drawings are given on different dates with different amount. Drawings means what? The partners take some amount from the business for their personal use. That is only drawings in class 11th itself you must have learnt. Drawings means taking some amount by the owner of the business from the business for their personal use. Now the business will ask interest. Business will say, this is business money you took for your personal use. So until you repay me, you have to pay me the interest. So this is only interest on drawing. Interest on drawing is always income for the business. From business point of view, it is income. From partner's point of view, it is always an expense. Why? Because partners are paying interest on drawing to the business. So it is expense for partner. For business income, business is receiving this income from partners. Now how to do the calculation? There are two methods. Simple method, that is lengthy method also we can say. Another one, product method, shortcut method for calculating when drawings are given on different date with different amount. And the second type of drawing, when drawings are made evenly throughout the year, product method only. Now we will see with example, we will try to understand. Chintu is a partner. Suppose Chintu, he is a partner in a business and withdraw the following during the year ending 31st March 2022. So now during the year he is withdrawing this amount. May 1st 12,000, again July 31st 6,000, again September 30 9,000, November 30 12,000, January 1st 8,000, March 31st 7,000. Different dates, different amounts, different month. Nothing matches. All are randomly. So the partner is withdrawing unevenly. He doesn't have any evenly drawings during the year. Amount is also different, months are different, dates are different. In this type of drawings, what type of method we use? There are two methods to calculate, simple method, product method. From both the method you are going to get the answer same. So, interest on drawing at the rate of 9% per annum. Interest on drawing 9% per annum. Now, we will be seeing how to do. First, we will be seeing simple method. So, first what you will write? You will write the dates, May 1st. Then you will write the amount drawn. So, May 1st, 12,000. Then what you will see? From May 1st to 31st March, how many months? For individual drawing, we will be calculating interest in simple method. So, if you see from May to 31st March, how many months? May, June, July, August, September, October, November, December, January, February, March. Exactly 11 months. So 12,000 total amount of drawing made by the partner Chintu, multiplied by rate of interest 9%, multiplied by time period, that is 11 by 12. Out of 12, 11 months. So 990 rupees comes for May month alone. Is it clear how we are doing the calculation? Yes. Swarnika, Pavitra?
Yes.
Okay.
Yes, ma'am.
Okay, dear. Now in the same way, each and every month we are going to do. July. There is a to see July 31st. Again you have to focus on date. May 1st, that is the reason we included May while calculating the interest. When we are seeing July 31st, end of the month, no interest will be paid by the partner for end of the month. He is taking the money July 31st. So he will not pay for this one day. He is not going to make any payment. So you have to leave July. Then from August you have to calculate the month from 1st of August. August, September, October, November, December, January, February, March for 8 months. So 6,000 amount of drawing. 6,000 multiplied by rate of interest 9% multiplied by 8 months, 360. Swarnika, you understood dear why we didn't took this 31st July? We are calculating from 1st August.
Yes, ma'am.
Okay. Pavitra?
Yes, ma'am.
Okay, fine. Again, if you see the next September 30, again we are not going to take this September month because end of the month, whenever end of the month comes, you should take from next month. So from October you will count till 31st March. October, November, December, January, February, March. So 6 months. Amount of drawing 9,000. Rate of interest 9%. Time period 6 by 12. When you do the calculations, you will get 405 rupees. Now November 30th, again see the date, very important. November 30th. So again from December you will do the calculation. December, January, February, March, exactly 4 months. 12,000 multiplied by 9%, 9 by 100 multiplied by 4 by 12, 360. Again if you see January 1st. So January you have to take, it's 1st of January. The drawing is made on January 1st. So for January month, interest needs to be paid by the partner to the business. January, February, March, exactly 3 months. Amount of drawing is given 8,000. So 8,000 multiplied by 9% multiplied by 3 by 12, 180. Now next, March 31st. Now focus on date. March 31st means 31st. So March no interest will be paid and it is end of our financial year. Amount of drawing 7,000. Interest will not be paid for March month by the partner. Understood? Why for March 31st no interest is paid? Yes?
Yes, ma'am.
Okay. So nil. Now you have to do the addition 990 plus 360, 405, 360, 180. It comes to 2,295. This is total interest on drawings. So product method we will be learning in next class. Okay. I hope till here it's clear. Anyone is having any doubt? Pavitra, Swarnika, any doubt, dear?
No, ma'am, it's clear.
It's clear. Okay, fine, dear.
Yes.
So Pavitra, if I may take tomorrow extra class. I'm not sure if I'm taking any extra class tomorrow. Will you attend it?
Yes, ma'am, I'll attend.
Okay, fine. I will let you know. I will send in WhatsApp. Okay, if I am taking the class. Okay, I will send the time.
Sure, ma'am.
That is extra class only. And what about my teaching? You like my teaching? You are understanding, dear?
Yes, ma'am, I'm understanding quite well.
Okay, you are comfortable. So are you willing to join?
Yes, ma'am, I'm willing.
Okay, fine. Because your mother said it depends on Pavitra. If she understands, she is comfortable, then it's okay. That's why I'm asking you directly. Okay, fine. No issues,
Yes,
dear.
ma'am.
Okay, fine. Tomorrow, if I'm keeping the class, I will let you know. Okay?
Sure, ma'am.
Yeah. Thank you. That's all. Just send me the notes immediately, whatever you have written, Pavitra and Swarnika. Okay?
Yes, ma'am.
Yeah.
I'll send it, ma'am.
Okay. Thank you, dear.
Thank you, ma'am.
Yeah. Thank you, dear. Bye. Bye.
Bye.
Yeah.